First, I'm going to talk about a couple of Pennsylvania tax credits. They are the Educational Improvement Tax Credit Program and the Opportunity Scholarship Credit Program, also known as the EITC and OSTC programs. Next, please. These programs are administered by the Department of Community and Economic Development, also known as the DCED. These credits are given to businesses that make contributions to qualified educational organizations, and those organizations fall into three different categories. They can be educational improvement organizations, scholarship organizations, or pre-K scholarship organizations. Or on the OSTC side, credits are given for contributions that are made to scholarship organizations that benefit students that reside in underperforming school districts by providing scholarships to these students to go to other public or private schools. There's a list of organizations that qualify under these categories on the DCED website, which you can find in the slides. And there's hundreds of organizations. Next, please. The credit amounts are substantial. You can receive up to 75% tax credit for every dollar spent if you make a one-year commitment to these organizations, or 90% tax credit up to 2 years, and you can apply for up to $750,000 in credits. These 75-90% credits are given for EITC scholarship organization contributions, educational improvement organization contributions, and opportunity scholarship organizations. 100% of the first $10,000 that you contribute to pre-K scholarship organizations are awarded under that category, and then you get 90% credit for the remaining amount that you would contribute, up to a maximum of $200,000 per year. And the pre-K scholarship organization, you don't have to make a 2-year commitment. That's on a year-by-year basis. Next, please. These benefits, these tax credits, can be applied against many PA taxes. There's probably about a dozen. They're listed on DCED's website, but the ones that we see being applied against in our office usually is the corporate net income tax, the personal income tax for PA, and also bank shares tax. Businesses apply for these, but you can also form what's known as a special purpose entity. And the main reason for applying for these special purpose entities is just to try to apply for these credits and make contributions to organizations that you desire to contribute to and get these credits. And these entities can be made up of a husband and wife. It can be made up of, a few members of organizations that are interested in contributing, say, to the art museum educational program or ballet program, educational program, things like that. And we can facilitate in helping you do this, and also in getting these credits. When you consider both the federal and state tax benefits of applying for these credits and making these contributions, it actually, out of pocket for C Corps, could cost you as little as $10 or less out of pocket, and $630 if you're a pass-through entity and you're taking the credit on your personal return, assuming you're in a 37% marginal tax rate. These credits can be used against other income besides business income on your PA return. You can use it against wages, capital gains, interest, dividend, all the 8 categories on the Pennsylvania income tax return. Next, please. The application process is that you fill out and complete what's known as a single application on DCED's website. And you can see on the slides how you get to that. The applications for first-time applicants are open on July 1st or whatever business day falls after July 1st for new applicants, and May 15th for those return applicants. As I said, the maximums are 750 or 200 for the pre-K program. And on the application, if you apply to get into one of the EITC programs and you're not credited with that, you can roll that application over into the OSTC program. And as I said, it's a first come, first served by day basis. So, it doesn't matter what time you put in your application on July 1st, it's all random selection on that day. However, just to note that usually the money that's been allocated by the state for these programs is usually gone and done by July 1st. If you do get the credit, you have to also be in state tax compliance, meaning you have to have all your business or individual returns filed and the liabilities all cleaned up. You will be allowed to come into compliance by being notified, and then they give you a certain amount of time before they pass on your credits to somebody else. So they are willing to work with you. Next, please. After approval, if you get the credits, you get a letter. You have 60 days from the date on the letter to make the contribution and 90 days from the date of the letter to get the acknowledgement that you did make the contribution from the organization back to the DCED. These credits can't be sold, assigned, or carried forward, but you can elect to pass them through on Form 1123. Credits can be used, as I said, against 100% of your liability, but they are not refundable credits. So, any questions or anything about how to do this? If you're interested and want to speak to me later about this, my contact information will be available. Next, please. Also, I'm going to talk to you about R&D tax credit. This has been around since 1981. And it was initially put forth to stimulate, of course, R&D in the US. What this credit is the dollar for dollar offset against your federal income tax liability or possibly payroll tax liability if you're a state startup company. It can also be used against AMT. Credit here is given for certain activities that are performed in order to develop, design, improve products, processes, formulas, or software. Also, many states, actually most states, have passed regulations allowing the R&D credit. And as you can see, there's a lot of industries that covers. There's no industry that's eliminated. So, it's a matter of if you qualify by what type of activities you're performing in your business. But as you can see, manufacturing, cannabis, software development, food, machinery, architecture, engineering, aerospace. So, it's unlimited. Next, please. What this credit would do is you would get roughly 12 to 16 cents on your dollar for every dollar you spend for R&D would be qualified for the credit. It's a dollar for dollar reduction of your federal liability and state income tax liability. This helps to improve your cash flow, increase your earnings per share, reduce your tax rate, and also this credit can be carried forward 20 years. You can also do what's called look back studies, meaning that you can go back 3 years, usually 3 years, and amend your returns for any unclaimed credits that might be available. And again, you can use these against your payroll tax liabilities if you're a startup. Next, please. As I said, it doesn't matter what business you're in, it matters what activities you are doing in your business that would qualify for the R&D credit. These activities have to be technological in nature, meaning they have to rely on principles of biological or physical science, engineering, computer science. They have to be for a permitted purpose, meaning they have to be performed in an attempt to improve something, whether it's its functionality, performance, quality, reliability, and it has to be either a new or existing business component. And that doesn't mean new to like everybody, it means new to your business. These activities have to eliminate uncertainty, meaning that the information that you discover should eliminate some uncertainties concerning development or improvement of a product or procedure. And it has to contain experimentation, meaning that somewhere you have to have activities that include testing, modeling, simulating, or trial and error. Next, please. What expenses can you include in order to calculate the credit? Well, you can include salaries that are paid to your people that are working in the R&D department or performing R&D activities, and also those that support R&D activities. All of your supplies and materials that you use to conduct the R&D activities. And also if you do contracted research activities that you contract to other companies or individuals to do the R&D for you, you can take up to a 65% credit if it's another business or individual, or if you're contracting with, say, a university or technical institute, you can take up to 100% of those expenses. These are claimed on Form 6765. There's a couple methods to calculate the credit, of which, we can help you with that. Next, please. Some of the changes, 2022, which there's been, organizations and whatnot that want the IRS to delay these changes, but right as of now, what happens in 2022, if you go to amend your return, you're going to be required to provide basically the R&D studies that are done for those years that you're doing the look back for. And that includes, listing out all the procedures, people, salaries, et cetera, whatever. But this is normally done as a process of the study anyway, so it's just a matter of attaching it to the returns. And this would include if you're passing on the R&D credits to the owners, shareholders, individuals, et cetera, they would also have to include this documentation. But like I said, there's been lobbying that they delay this until 2026. And just to let you know that Pennsylvania and New Jersey do allow R&D credits. They have their own forms and their calculations are a little different than federal, but as I said, we can help you with all this. And if you have any questions on any of these credits, feel free to contact me.